Is the looming stock market pullback a cause for concern or a buying opportunity? This question is on the mind of many as the American stock market teeters on the brink of a potential pullback. But what exactly is a stock market pullback? Well, it's a temporary decline in stock prices, typically between 10 and 20% from a recent peak. It's a common phenomenon in the market cycle, not always a harbinger of doom. In fact, pullbacks can be quite healthy for the market. They allow for consolidation, providing a breather after a significant upward trend, and pave the way for a more sustainable rise. So, while a pullback might seem alarming at first glance, it's often just the market's way of catching its breath after a sprint. As we delve further, we'll understand why a pullback might be happening now. Several factors could be indicating a potential pullback. First, overvaluation. After a strong bull run, some market analysts are raising eyebrows, suggesting that the stock market may be overvalued. In simpler terms, the prices of some stocks might be higher than what the earnings of the underlying companies justify. Second, the Federal Reserve's looming interest rate hikes. To combat inflation, the Federal Reserve is expected to raise interest rates. Higher interest rates could make stocks less attractive, potentially leading to a market sell-off. Third, investor sentiment. The stock market in many ways is a psychological game. If a significant number of investors start worrying about a pullback and decide to sell their stocks, their actions could ironically trigger the very pullback they fear. Understanding these factors is crucial in navigating the market's choppy waters. Now that we know the reasons, let's look at what to consider during a pullback. A wise investor prepares for all market conditions. So let's delve into key considerations. First off, historical context. It's crucial to remember that stock market pullbacks are a frequent occurrence. In fact, the S&P 500 typically sees a pullback of at least 10% annually. Next, focus on long-term goals. If you're investing with a long-term perspective, a pullback shouldn't cause panic. Instead, it could present a golden opportunity to scoop up stocks at lower prices. Diversification is another key strategy. A well-diversified portfolio across different asset classes can help buffer the impact of a pullback. Looking ahead, there are some news items to keep an eye on. The release of the Producer Price Index on March 14th could give insights into the inflation situation. Also, watch out for statements from the Federal Reserve about future interest rate hikes. Remember, a stock market pullback is a possibility, but it's not necessarily a cause for alarm. Stay informed, focus on your long-term investment goals, and consider consulting with a financial advisor if you have concerns.